Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a wonderful weekend so far. Today we're going to be diving into our daily cryptocurrency market update, and we're going to be spending the majority of it talking about the CPI print that we had yesterday. We were saying on this channel that, look, given the commodities that we're looking at, it's likely that you're at least going to get a similar CPI print in the 8s, and if not a higher one. And we did indeed get an 8.6 print, which is the highest that we've had inflation, according to the CPI, since 1981. Now, inflation is, in my opinion, a lot higher than 8.6%. I think the CPI stat is very conveniently put together for the likes of the government. But ultimately, I think inflation is a real issue. And the reason inflation is bad, relating it to the cryptocurrency market, is because it's going to drive the Federal Reserve to take liquidity out of markets, and not only that, actually increase the dollar in terms of strength by upping interest rates, which is bad for assets, certainly the equity market, the tech market, and of course cryptocurrency. So this is bad. This is not good news at all. You know, if we got a lower print, if we even came into 7.9 or something, markets would have probably found relief on that, but they haven't, because they know that this ultimately is going to lead Jerome into potentially being more aggressive. We've got 0.5% interest rate hikes scheduled for the next 3 meetings. Are they going to throw out a 75 basis point hike raise or hike? That would be pretty detrimental. And we've been looking at a number of things on my Patreon, like the euro dollars and a number of other things that really suggest that the market is very, very hawkish, and probably going to get more hawkish. So people really are looking towards Jerome coming out and speaking next week, and going to be monitoring his comments very, very closely. A big comment that I took from the last one, where we actually saw the market see a bit of a rally, was just expressing his admiration for Paul Volcker. For anybody that doesn't know what Paul Volcker did, was he essentially just went, right, we're going to get interest rates into the double digits, and we're going to kill off inflation and kill off at the risk of a recession, of course, which is what then followed. So we're in a similar situation today. He's going to have to, the fact that he was expressing his admiration for Paul Volcker for doing what he had to do and not what, he was going to be popular for, really suggests to me that Jerome is going to get a lot more aggressive on markets. And that really ties into our narrative that this is risk off. It's a totally risk off environment. Cash, unfortunately, and it's very contradictory for somebody as into crypto as I am to say this, but cash is king right now, because you're going to get crypto at a discounted rate, in my opinion. And the reason being is because we're going to get more of what we've already seen cause the market to sell off. And when you think about the cryptocurrency market as a space, you need institutional money coming back into it to really get some sort of a bullish rally, or a sustained bullish rally, and to really flip this market from a downtrend to an uptrend. There's zero reason. In fact, there's even more reason now for institutions to not have risk in the likes of crypto and the equity market. And of course, Friday, we closed down pretty hard on the equity market. NASDAQ, if you look at that, we've been saying the NASDAQ is going lower. Look at that for a gap. Ultimately, this is a risk-off environment, even for crypto going into the weekend. Of course, the stock market doesn't trade over the weekend, so crypto's on very shaky ground. It's very frustrating, actually, this trading, because you've been in this range, you're back in it now, you've had no clear break, which is really what we're wanting to go short. We did want slightly higher prices, but potentially we may not even get them. Every rally that we've seen has been very quickly killed off, and even from a trading point of view, traders are very skittish here, because they're trading the ranges, and not only that, any signs of weakness, they're out. Any times of strength, they're in, because they're basically just range trading right now. This is going to get broken to the downside, in my opinion, and it's going to come to the tune of the sort of macro backdrop, which doesn't look great. And a quick thing on inflation. This is from Gavin. Essentially, he's saying price increases in the last year. Fuel oil is up 106%. Gas is up 58%. Gas utilities are up 30%. Used cars are up 16%. New cars are up 12%. Electricity is up 12%. Food at home is up 11.9%. And overall CPI comes out at 8.6%. So there's definitely some tomfoolery, in my opinion, with the CPI stats. But we're going to take them at face value because that's what the market is doing, even though we know inflation is already in the double digits, guys. And it's a tax on everybody. And certainly even more of a tax on the poorer end of people, that really those percentages make a huge difference in terms of increases. The Fed will raise rates into the week ahead, but what Chair Powell says may matter most. Yeah, absolutely. The Federal Reserve's two-day meeting is the highlight of the week ahead, and the next catalyst for markets will be what clues it gives about future rates. So if they come out and go, look, we're going to start thinking about a 75 basis point rate hike, like we've suggested. We've not spoken about this on YouTube, but we have in the Patreon that you know, when you look at the market pricing and interest rates, it's doing it aggressively. You know, it thinks interest rates are going to come and at a potentially faster rate than what they already are. And that's my thesis. And we see this market, we've shown you time and time again, certainly in regards to Bitcoin, coming down to the lower bands here. And also you've got your 200 weekly moving average. No reason to suggest Bitcoin doesn't come down here. You guys do the maths on what that means for your favorite altcoins, because altcoins will sell off in a higher beta fashion. Strong inflation, anxious consumers add up to more worries that recession has already arrived. It has, in my opinion, because, and this is one reason, the European Central Bank are essentially going to up interest rates in July. This is the first time in 11 years that these guys have done this. And every time they've had to up rates, we've been in a recession. So I would say, you know, within the coming months, that's very likely what we're going to be in, is a recession. And if you did your own sort of calculations, you kind of come up with that estimation anyway, because if you look at growth, if you look at everything, and this is the danger that we now have, is do we enter a stagflationary environment? That's not good for anything. You know, at least with inflation, there's certain things you can do, but in a stagflationary environment, your growth's killed off, inflation is sky high, and interest rates are high. So we enter stagflation if they continue to up interest rates without getting inflation under control. That's a really bad situation. That would be recessionary in itself. So it's not going to be a great week, I don't think. Like I say, Bitcoin's in a very, very annoying place, but certainly going into Monday, you know, Sunday night's going to be key, because you're going to be wanting to watch your futures like the ES futures or the ES mini. Because if this opens hard, you know, this will potentially front run things. There can be a huge disconnect between the futures and the actual stock market, but that's going to give you an indication of what investors are looking at. And for me, likely that, you know, Monday is going to be a bit of a brutal day and not find any relief and actually continue Friday's selling. The dollar, if you guys follow me on Twitter, you'll know we did call for a reversal in the dollar and new highs. We got targets a lot higher for the dollar. At least you could get into your 110 range. That's going to be catastrophic for assets. And if you understand the actual principles of what interest rate hikes from the Fed level, so Fed fund rate hikes do to the $2, and why it actually strengthens it, because the demand for those dollars goes up. Fed aren't stimulating anymore. You know, it's kind of like it's been very expansive, and now it's really, the demand is really ramping up. You know, it's been very free flowing, and now it's not. It's kind of getting blocked, but it's not a good situation across the board. We have previously spoken about Bitcoin dominance and how this is on the move. Let's get a bigger chart. You know, you can see you've broken out for Bitcoin in terms of dominance, and you're now going up. Typically, when Bitcoin dominance is going up, that's bad news for markets everywhere. So that's really the bulk of what I've got for you in this video. It's just a short and sweet update. We will try and get 2 videos out. It's just that I'm pretty busy and wanting to put a lot of time and effort into the group that we've got going. But we will try and get at least 2 videos out covering a number of altcoins and a number of other things. All I've got for you in this one, guys, if you have enjoyed this content, a like is always appreciated. So is a comment. Remember, watch for how the futures open on Sunday night. Keep an eye on Bitcoin dominance, and, you know, just brace yourself for Monday. Monday could be brutal. That's my thinking so far, is that crypto is very low volume on the weekend, but if you end up in a situation where, you know, Monday comes around and you see volume selling, you're going to get that within the crypto space. And there's no reason. I mean, do you do something similar to what you did over here, but instead of going up, potentially take that next leg lower? Or do we get more of a sharp pull down to this sort of 200 weekly moving average in our long-term regression bands for Bitcoin? It's going to be a very interesting week, guys. Lots to look forward to in terms of market moving events and events in general. We'll keep you up to date on this channel, so make sure you hit that subscribe button. Anyway, guys, I'll catch you all in the next video. Thanks for watching. See you in the next one.